Hello investors, welcome to Business Learnings. In this video, we'll be talking about Asian Paints Limited. Uh, the stock has corrected by 20% and whether it's a good time to enter into this stock or not. We'll talk about everything, the pros, the cons, and towards the end, we'll also have some idea on whether it's trading at attractive valuations. So make sure that you watch the video throughout the end and do subscribe to the channel for supporting me. Thanks a lot. So let's start. If you see, Asian Paints used to trade at about 2,900, close to 2,900 levels. Its all-time high was 2,873, and now it's just 2,377, about 18 to 20%, 18% of correction. The main reason is Aditya Birla Group. Aditya Birla Group has announced that Grasim Industries will be venturing into the paints business, and they are planning to invest 5,000 crore rupees in the next 3 years, which means there will be more competition, which means that each existing player may lose out their market share. And that's what the worry is, and that's why the stock is beating down. There are other reasons also. But is it really going to happen? Will Grasim Industries be able to replace Asian Paints or take out their market share? I don't think so. The reason being Asian Paints is Asian Paints because it has created such high barriers of entries that other players, even if they enter, they cannot compete with their prices first, and they cannot replicate the kind of distribution network, the kind of demand forecasting that Asian Paints Limited has in place. That's why I do not see Grasim Industries as an immediate threat. Maybe a few years down the line, when they learn how to actually uh, do the paints business, we'll see things unfold. But immediate, we do not see any 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 fear factor in per se. Then why is the stock price falling? The stock price is falling because it had seen in the past couple of months, they had seen a dramatic rise of about 20-30%. And when stocks, they see a good amount of upsurge in quite small amount of time, they are typically beaten down even on smallest hints of negative news. So that's what the reason is. There has been a lot of profit booking, and that's why the stock is falling down. But is it justified? I don't think so. I'll give my reasons why I don't think that this price is justified. It should be trading at much higher price. I'll tell you the reasons. See, if you look at the quarterly results on December quarter, 6,788 crore rupees of sales. December 2019 was just 5,420. This is a rise of about 25% sales. And in terms of profit, net profit, if you see, 764 to 1,238. So about 70% rise in net profit. This is phenomenal. 70% rise. In that too in December, when I would say that coronavirus is still not gone from the country, people are still hesitating. But the kind of strategic decisions that the company took, the kind of focus, the kind of cost cutting they had done, it's really commendable that they have came back with such flexibility and such good numbers. And that's why the earnings per share is 12.91. See, increased from 7.97. So that's why I see that Asian Paints has a very good potential. It has very good management, very good numbers. All the numbers are right here. Another important thing that I wanted to talk about in this sense is a lot of people point out that PE is quite high for Asian Paints. If you look at the PE history of Asian Paints, I'll show the maximum for the past 15 years, the history of PE ratio of Asian Paints. You see, it used to trade at about, the PE was about 25 to 30. PE means price to earnings. It basically tells you to earn 1 rupee, how much are you paying to invest in the company. So about 25 to 30%, 25 to 30 used to be the PE. But if a company keep on consistently deliver good results, then something called PE re-rating happens. PE re-rating means analysts say that this company is expected to consistently give out great results, and that's why its PE should not be 25 to 30, its PE should be 35 to 40, and that's how PE re-rates. And PE re-rating happened with Asian Paints, and it started trading at 35, about 40 PE ratio. Couple of years down the line, 3-4 years, every 3-4-5 years, PE ratio is re-rated for good companies, and that's what has been happening with Asian Paints. So very recently, the re-rating says that Asian Paints should be trading at a valuation of about 65 price to earnings. Right now, its price to earnings is about 81. So it may be overvalued. But I'll say that please look at the numbers. Please look at the numbers because uh, March and July, I would say that even September quarter also, the numbers are suppressed because of the pandemic, because of the coronavirus. But they have came back, and the expectation is in the coming quarters, in the March 2022, March 2021, June in the June quarter as well as in the September quarter, they are expected to give quite good returns. Historically, they have been growing at about 25% CAGR. Let's just do that kind of extrapolation and see what kind of PE are we expecting, what kind of price are we expecting. Let's do that. You see, if I just go back a year, see the numbers of March, 4.92, let's say about 5. June about 7, and September let's say about 8. So 8, 7, 15, and 15 and 5, 20. About 20 should be the earnings of March, July, and March, June, and September quarter combined. For December, we already saw 12.91. So this was the earning for March, July, and September. The earning was about 20 rupees per share for these 3 quarters in 2019. What would be the earnings in 2022 in the financial year? In the financial year 2022 and the calendar year 2021. What will be the earning? 2 years, 25% each growth. 20 will become 25. 25 will become 31.25. 31.25 and 12.91. This becomes about 44. 44 will be the earnings, and 44 multiplied by the expected PE ratio of 65. 65 into 45 uh, will be about 2800 rupees. So justified price will be about 2800 rupees, and that's where we would be at least at those levels in the next 1 year. So right now it's we can easily see an upside of 20% in the next 1 year. So personal opinion, the stock looks undervalued to me at this point in time. I would go the staggered way. I'll buy one stock probably. Tomorrow, if the stock further falls, I'll buy one more, and that's how I'd advise to go about it. But that's what my thinking is. Please know that I'm not a SEBI registered investment advisor, so do your own research, your own analysis, consult your stock advisor, and accordingly decide, because it's your hard-earned money. Thanks a lot for watching this video. If you have any questions, please put down in the comment box below, so that I could further improve on my future videos. Thanks a lot for watching. See you in the next video.